HBAR holders, I have good news and bad news. Bad news, staking rewards are going to be slashed by 4%. Good news, another Hedera company has been added to the FedNow instant payment system. We're also going to hear from Jose Fernandez de Ponte, Senior Vice President of Digital Assets for PayPal, tell us about the DeFi plans that they now have for this stablecoin. So if you're staking or planning to stake your HBAR anytime soon, the Governing Council has made some major changes you need to be aware of. As of August 11th, staking rewards will be capped for all participants at 2.5%. This is also going to include node operators rewards, in essence, putting us all on equal playing field. That's good to see. Something else good to see, 60% of all HBAR has been released into the market. So I'm giving it another 12 months before we see a massive supply shock for HBAR. But let's get into some really good news. FedNow Service Provider Showcase has just added a new crypto company to its roster. Drop, the micropayment services company built on Hedera, will now be able to offer its services to as many U.S. banks as they possibly can. Drop will be able to handle real-time payments through FedNow, followed by credit transfers and then a request for payment. Now, it's important to note that not all providers are certified to process incoming and outgoing payments. This puts Hedera technology on a whole different tier. According to the showcase posting, Drop is also exploring banking partnerships to enable FedNow to offer merchants end-of-day instant reimbursement. So on a retail level, Drop is going to provide pay-as-you-go services tailored to digital services providers, news and media companies, very interesting, and connected devices like parking meters and EV charging stations. Now, how many EV charging station plans have we seen come from our president? My point exactly. The relationship between Drop and Hedera goes back as far as 2021. Like I said, they're using the hash graph, which is Hedera's fancy name for their DLT. Their positioning, though, is going to make things like customer engagement, fan rewards. It's going to take it to a whole nother level, and they're going to be very attractive to retail companies that I am pretty sure are going to be working with FedNow. The crucial piece to take away from all of this, though, is the importance of micro payments. These are payments that are typically smaller than $1 or a penny. The problem is, though, for legacy companies, these micropayment services typically cost more money than they bring in, right? Google, Apple, and PayPal, they all use micropayments, but the government has also been interested in micropayments, and I can think of a program right now that would be a perfect use case for. And then for PayPal, earlier in the month, we know they launched the PYUSD on Ethereum, and now Senior VP Jose de Ponte is telling us that they have bigger plans for this stablecoin. Before we go to the clip, I want to share with you this slight detail. The PYUSD is an ERC20, so it's deployed on Ethereum, and it can be sent to outside wallets that also enable ERC20. That's a lot of wallets, fellas.
So speaking of regulation, at this moment, stablecoin legislation has, for the first time, cleared the initial committee stage in the House of Representatives. And I wondered, is the timing of your launch coincidental, or, did that give you some vote of confidence to launch now?
We have been following the legislative process for a long while. I agree with you. I think it's fantastic that we're seeing traction there and that those bills are being discussed. There are obviously still differences between the parties on the legislation that it would see, but that is a democratic process and that is what should happen in Congress. In general, I wouldn't point specifically to those bills being passed out of committee as a trigger for our launch. There is a macro trend of clarity around the stablecoins that is happening in the world. It was MICA in Europe a few months ago. It is the UK, Japan, Singapore. There are many markets where there are clear regulations around stablecoins, and it's fantastic to see that the US is getting there. But also there is a framework in place today. We care a lot about strict and robust frameworks, and that's the reason we went to New York, because that's the most robust and strict and rigorous framework for stablecoins that is available in the land today.
Reminder, if you're looking to support the channel, the merch store is now open. Also, don't forget to check out our second channel for more thought-provoking crypto content, DHN Crypto Docs. As always, I'm Wade Teamer. Have a great day, have a prosperous day, and most importantly, if that money is digital, so is the hustle. I'll see you in the next one.
In your bank account, the Federal Reserve announcing it has gone live with its new FedNow instant payment system, a system that should allow households and businesses to send payments and receive money immediately without those troubling 3-day holds on checks and waiting for payments to clear in the sender's account and waiting for the bank to open on Monday or after a holiday. The FedNow system is an instant payment system. It's available 24/7, 365 days a year. To begin with, 35 banks and 16 service providers have already signed up. Those banks include things like JP Morgan and Wells Fargo, as well as smaller credit unions and other banks. Unclear if the banks are going to charge for this instant payment. They are charged, but they may or may not pass that along to consumers. Fed Chair Jay Powell saying in a press release, over time, as more banks choose to use this tool, the benefits to individuals and businesses will include enabling a person to immediately receive a paycheck or a company to instantly access funds when an invoice is paid. This doesn't eliminate the PayPals and the Venmos of the world or Zelle. Theoretically, they could use the FedNow system, which is a bank-to-bank system, to send payments, but it's unclear, guys, if those services now face a new challenge from banks of all sizes that can offer similar services. Sarah?
But bottom line, faster payments, good for consumer, right, Steve?
I think so, Sarah. That's exactly right. I think you get there and you don't have those holds on the checks. Look, if you have money in your account and you send money to somebody else with an account, obviously they can take that money out, but there's actually a hold on that account. It's really for people who don't have that money on account. Say a small business guy who's doing a big project, gets a payment, has to wait till that payment clears. It could really help them out.
Banking Committee lead Republican Senator Pat Toomey unveiling new legislation aimed at regulating stablecoins. Senator Toomey, it's nice to see you this morning.
Good morning.
Let's talk about stablecoins because they've become a central feature of this crypto market. How concerned, though, should we be?
Here's the way I think about this, Andrew. Today, as you know, stablecoins are a tool that facilitates trade within the crypto world. But because of their stability, their price stability relative to the dollar, I think there's a real possibility that they could be adopted more widely, that they could be used in the physical economy, especially when you consider the tremendous potential of the advantages of programmable money, which is inherent in stablecoins. So what I'd like to do is have a sensible regulatory framework that allows this space to thrive, allow the innovation to occur with some sensible consumer protections. And so that's what I've proposed, a flexible regulatory regime that gives stablecoin issuers some choices, some options, would require disclosure so that consumers know exactly what are the assets backing a given stablecoin, for instance, and what are the redemption rules and policies. Also, third-party attestation that would require to be audited periodically to make sure that consumers know what is backing this. And it would also have the privacy features of Gramm-Leach-Bliley.
Senator, what's your sense of whether we even need stablecoins, which is to say, should there just be a digital U.S. dollar?
You know, I'm kind of thinking exactly the opposite way around, Andrew. You know, we have stablecoins. They exist. They work. They have tremendous flexibility and some huge advantages. They do not interfere with the Fed's ability to conduct monetary policy as long as they're backed on a one-to-one basis. I'm not reflexively opposed to a central bank digital dollar, but I don't know how long it would take to get there. I don't know how well they would do it. I don't know if the design would be something that most Americans would be comfortable with. So we can wrestle with all that, but in the meantime, let's allow this new innovation to thrive.